the main focus, but don't forget, we also have the BOJ, we have the BOE, so a lot of central bank action this week. So don't be stubborn, tread lightly. This week may be more of a week of managing positions than putting on new stuff. On Friday, I said buy the euro, the pound, the Aussie anywhere, and hope it moves lower. And so, even if you weren't long earlier in the week, you have a nice little lead of 86. And you should have been long earlier based on the recommendation in pound at 130.40. Got to 130, but this was talked about for a long time. So if you're long from there, you really have a nice move to the upside. What's happening here in both the euro and the pound, and to a lesser extent the Aussie, they're all forming bull flags. These are more classic. So that is a continuation move. As I said on Friday, that I'm looking for the potential of 115 euro. And if you just take the measured move in pound, you're probably talking about 137, 138. So a lot of upside left. Here's how I'd play it. I'd actually wait for the Fed. And if they go a quarter, I think the market's going to be a little disappointed across the board. Let's face it, it's all one market. S&Ps, equities, oil now even, metals going up, even the grains, which have been trashed, everything going up, all one market, everything going up together, everything going down together. The difference is the size and magnitude of those moves. But as I said last week, you have to be a dip buyer now for a while, especially until we complete in the S&Ps up. It could go as high as 6,100. We'll see. Maybe I'm turning bullish for the melt up at the wrong time, but I don't think so, having been on the other side of the market in July, and then August was less rewarding. So I'm just going to let this thing play out to the upside. And part of this is a weaker dollar. And here's a dollar. We're pressing last week's lows. Last week I talked about the potential for an outside week. That means that we took out last week's lows. There we go. And you would think we'd go for at least stops under par 50. But there could be a scenario if the Fed disappoints where we end up with some type of outside week. See, we took out last week's lows. And now if we don't break down, we could end up rallying into an possible outside week and then get to 250 by a circuitous route instead of going here. So manage your positions. Always good to take some profits and tighten up stops. You could probably tighten up with what you want to hold back to break even. And on a longer term, I just wanted to show you guys a correlation and what the projections are. So I was talking be a buyer in silver at 28, and I liked silver better than gold. And here's the reason. Gold-silver ratio started to come down from 90. That was last week. And I want to show you guys the difference. Let's just look at, let's go to the monthly. So when you go to the monthly Dixie, you'll see that we have a very similar formation with a spike high, big break, and then sideways action. And so the dollar, same thing, right? Spike high, sideways action. And then once we topped up here a couple times, we're back towards major support. So you also have a weekly moving average in here too for a breakdown. And this is how you could get that longer term target of 90, 88 in the Dixie. But if you look at that and you look at the gold silver ratio, it's pretty similar. You had the big top, and this has been a little bit better than sideways. This is silver, that's why. So you had your big top, in the silver gold ratio, just like the dollar, right? Same thing right here. And if the gold silver ratio performs like the dollar did, the dollar is back testing major support down here. This is going to do the same. So what's the difference? The difference is if you want more beta, potentially we're going to 70 is the next support level in the gold silver ratio. So that means silver outperforming by about 15%. And then if we take out this 70 level, we could very well be talking about 50, 40, which would be a mean reversion trade. And then you're talking about silver outperforming gold by 50%. So that's an important thing. I would use weakness or strength in the gold silver ratio and it rebounding and a pullback in silver. Maybe we get a pullback in silver to $30 or so. If the Fed only goes a quarter, maybe we pull back to prior highs. I would use dips as buying opportunities in silver and also rationale for selling the gold silver ratio. Silver should be the leader. Let's see how some of the silver stocks, they all had a great week. I want to just show you one I've talked about for quite some time, and it's Fortuna. So you guys know before the bottom in March, I had said this was one of the better candidates. So this was one of the only silver chart companies that did not make a new low in March when we bottomed. It was here. And we had this big move. I mean, it's a double, a little more than double. And the pullback was to 4. And you're wrong under 4. And I think there's a good potential on this move. We basically went from 2 to 6. That's $4. That we could go 1.618 from 4 will give you 10. Well, what's important about 10? 10 has been major monthly resistance for a long time. Look at that. So this move from here could get back up there, and you could call this a rectangle. You have a flat bottom, you have a flat top at major resistance. And then if silver really makes a run, and right now I'm only looking for 33, but if we start to get the run towards $50, it's going to break out over 10. And that would be a $9 $8 range above 10 is going to give you 18. So also, I don't think this is going to be the top in NASDAQ. We're coming off a bit today. I think we just have to take care of unfinished business in both the NASDAQ, but especially in S&Ps are pulling back. So just like I'd be buying a break in euro and cable and selling rallies in the dollar, I'd be, if you want to play it, I'd be looking to buy a break, maybe even, 80 handles lower. This 5,500 level was key. It's a pivot. Look left. Okay, 55 was important when we broke down here. Also this, so 55 is possible, but look at 56. At 56 here, so maybe only a rally back towards this 55.60 level, 55.20, and then go again. So I just wanted to touch upon those. Newmont actually looks, like it's diverging on a 4-hour and also the daily. So I like the look of the silver miners over the gold miners, and they're unexploited and doesn't take as much capital to flow in there to get a major move, especially some of these low floaters in the precious metal arena. And here's what I'm talking about in Newmont. See, so we made a new price high, but the daily did not even come close. So that's not a stock I'd be long. Could it keep going? Of course, but it's been giving some negative confirmations all the way back to this high, which was in July the 15th. So 2 months it's been diverging. It's made some upside progress of about $5, but that's not a great looking chart. And if we fill the gap, it's an exhaustion gap. If anything, I'd wait to buy a break if you like Newmont, but I prefer these little ones like I was showing you, Fortuna. On a pullback, this will be a nice little breakout over 5 once we get it, but we could pull back to 470, 450, some type of retrace of this move. But over 5, you're talking 6. Okay, this is a $1 range here. So it's threatening to break out. I think we'll get a pullback first. So those are my views on the markets right here. The dollar, very important levels here. Are they going to be able to turn the dollar? The last thing I want to touch on, and I brought it up in last Friday's video, is I'd be very careful. It's not, it's not a contrarian trade now to be short US dollar yen from 162 to 140. That's 2,200 handles. And the yen even today is fighting its way back. So I know it's counterintuitive, but whatever the Fed does, since yen does correlate with yields, that they only go a quarter, yields will pop, yen will pop. I have a lot of confluence coming in around 145. I have the break of the triangle line and the 200-day coming in around 145. That would not upset the bearish outlook in US dollar yen. I think eventually we're going to 130, but it could shake out a lot of people late to the party, rallying back to 45. So everyone have a great day. Good hunting the rest of the day. See you in the room. Also keep this in mind. No one has a gun to your head to trade ever, but especially on big red events like the Fed, there are so many variables and different potential narratives and outcomes on what the Fed does that it's okay to be flat and then come back into the markets afterwards after the dust settles. And if you have to be patient for your next setup, so be it. But you're not taking a huge risk based upon a red event. That's the most important thing. The difference between pros and amateurs are pros know how to lose, so they have money left to be right with. They also know how to protect profits and to manage your position and manage risk, and that's the key. So I believe Mike will be with you in a little while. Mike and I will be back together tomorrow at 11 a.m. And with everything that's going on with the Fed, I'm going to be bringing in Adam Button of Forex Live to get his take as the dollar's on the precipice of a major breakdown. And Adam's an excellent analyst and news trader. So we'll get his impressions of the Fed before the Fed on Wednesday at 10:30 a.m. EST. Have a good day, everyone. Any comments or questions, you can leave it at the end of the video. I check it out to see, people have ideas, or if people don't quite understand what I'm talking about or have a counter view, it's okay to have a counter view. Some of you guys help me out there. So let's keep it collaborative and do most of that in the main room at TradeGATEHub. See everyone tomorrow with Mike V. Adios.